Well, everybody, Tesla earnings came and went. No earth-shattering kaboom. No nothing, I guess. It was just kind of a fizzle. Fizzle for shizzle. Anyway. Morning. Welcome, everybody. Let's just back into the frame there. And welcome to the show. Morning Monster, where we kind of dive in and try to break it down. Find some opportunities. Got good friends like David, Don, Craig, Mark, Rob, Hugh, Scott, Matt, Jim, Will, Arturo, B, Mary, Serge, Ivan, Ed, Ted, Ed and Ted. Welcome, everybody. Welcome back. So, another subprime lender goes bust. See this all over the mainstream media, or were they too busy talking about the East Wing of the White House being torn down and how that's going to affect the markets? I don't know. You ever get that feeling that the global economy is just a giant game of Jenga? I mean, that's like the way I feel like it every day. Some guy, probably named Chad, just confidently slid out of a really, really important block. They just like pulled that block right out of the bottom row. The whole thing's like, I mean, yeah. This week we saw another one of those Jenga blocks pulled out by Chad. A little company called Primalend Capital Partners. That really comes off the tongue, right? Primalend Capital Partners. I mean, it sounds more like your friendly neighborhood loan shark from a Hallmark movie than like an actual business that people borrowed money from to buy cars. But Primalend is what we call in the financial world a subprime auto lender, or it was anyway, until it went poof. For those of you that might be new to the show, subprime is a polite way of saying lending money to people who statistically, let's call it, have an enthusiastic way of paying their bills on time. Yeah, specifically, Primalend finances the dealerships that you see on the side of the highway with the giant inflatable gorillas and the little, guy that goes like that. The buy here, pay here type of lots. It's a simple, time-honored business model. You don't have great credit? No problem. We'll sell you a 10-year-old sedan with 150,000 miles on it for the price of a new one and give you a sweetheart rate of like 9%. We'll give you the loan ourselves. You just come in and pay weekly or bi-weekly at an interest rate that it might make a credit card company blush. I mean, sometimes you see 20, 30% on some of these. I mean, it's the American dream. On layaway, make those payments and everything's good. Now, Primalend just waltzed into bankruptcy court, and the market, for the most part, just yawned. Why? Because Primalend isn't the first of these cockroaches to scurry out from under the fridge. It's not even the second this year. This follows the spectacular implosion of Tricolor just last month, and this is where the story gets potentially interesting. Tricolor wasn't just your average run-of-the-mill high-risk lender. Oh no, they were a fintech company. They had an AI-powered platform. They were doing social lending, and it turns out social lending was their term for giving car loans to illegal immigrants with no credit history, no driver's license, and we could lend multiple times on the same car. Interesting. U.S. Treasury even certified them as a community development financial institution. You can't make this stuff up. They were basically getting government brownie points for building a business on the back of the riskiest loan imaginable. They were selling rapidly depreciating assets to the people with no credit whatsoever. And Wall Street was packaging up these loans like they always do, packaging them up into bonds, slapping the word investment grade right on the bond, and putting a rating, selling them out to other banks as investments. It's kind of like selling the same JPG of a rock to 10 different people as an NFT. Oh, wait, that already happened. We already did that. Never mind. When Tricolor finally blows out, it came out that they were being investigated for potentially systemic levels of fraud. Allegations that were pledging the same car as collateral for multiple loans. This is genius, right? Genius. It's illegal, too. And just when you thought the Jenga Tower wouldn't wobble anymore, another block pulled out. First Brands. This was a little different, though. First Brands isn't a lender. They make parts. Oil filters, wiper blades, brake pads. They were a pretty huge player. They filed for bankruptcy with over $6 billion on their books and another $2.3 billion in off-book financing that is, well, just, I guess it was a rounding error. Poof, gone, vanished, can't find it. When the lawyers had their first bankruptcy hearing, 750 of them showed up on the Zoom call. 750 lawyers. That's a Category 5 disaster when the lawyers need their own stadium to show up. I mean, a little nutty. So, you got these lenders going bust. You got parts suppliers going bust. And the parts suppliers supply these car dealers, too. What's the common thread here? Greed and debt built on shaky ground. Auto loan delinquencies are now hitting all-time highs. Car repossessions just set an all-time high in September. Never had more car repossessions. It's good business to be in right now, apparently. Even the governor of the Bank of England is saying that this collapse here, these little subprime auto lender things could be a much bigger financial problem than anybody's giving it credit for right now. As great as Jimmy Dimon is, he kind of said after this Tricolor news that, well, when you see one cockroach, there's probably a bunch more scurrying around. Well, now we got 3. The infestation that's creeped in here is real. So what's the play? How do we actually make money out of this mess of... It's a mess. I mean, there's no two ways to code it here. It is a mess. First, there's the obvious. Look at the company. That's like Carvana. The car vending machine. Their stock took a nosedive on that Primalend news. Why? Because according to a report from Hindenburg Research, a huge chunk of loans that they package and sell, this is Carvana now, are deep subprime. Carvana has big growth plans, and those plans rely on selling a lot of cars to people, and the best place to go is people that need a car today with shaky credit. In a world where subprime is just kind of like blowing up, blowing out, that business model might be a little bit fragile. Might be a little bit of a bumpy ride here. Now, number 2, for the more adventurous out there, The Big Short. Seen the movie? Remember those bonds I mentioned? The financial lasagna of car loans? Well, they're called asset-backed securities. The big banks out there, ratings agency, they swore up and down that the top layers of this lasagna were prime, grade A beef. We topped this thing with the filet mignon. But let's dig down in the bottom layers, and, well, seems that the whole bottom is cockroaches. That means you can look into credit default swaps on these automobile-backed securities, asset-backed securities, essentially betting that they might fail. It's a complex trade, but that's how fortunes were made in 2008 with credit-backed securities. If you credit default swaps, if you haven't heard me talk about that, Bitcoin is like a credit default swap on the entire fiat system blowing out. So I've talked about that in the past. It's kind of crazy. Now, the biggest takeaway, the real investment opportunity is a lesson in cycles. The legendary short seller Jim Chanos said it best. At the end of cycles, everybody's guard is let down. They think that everything's going to continue. We're going higher. Right? You hear it on the news. Nothing's going to affect this market. Right now, we're coming to the end of this long cycle. The last big problem, it's crazy to, it's almost 20 years ago. The last big great financial crisis, that was almost 20 years ago. People got lazy. Banks got greedy. Stopped asking questions. Party's going to continue. This is what it looks like when the tide goes out. We'll see who's swimming naked. It's going to be interesting. So, as you sip your morning coffee, I have my Monster. Just remember, next time you see a buy here, pay here sign, might as well be a big danger sign. This isn't just going to be about cars. These are cracks in the foundation of the credit markets. And one of these blocks, it's going to make the whole tower come down. For the love that's all of holy, check the collateral twice, 3 times, my lady. Be careful out there, everybody. We'll figure out how to make some money today. Check it out. Dun, 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 dun. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. I make some predictions. Maybe I get it wrong. Kind of got a lot of things right over the last few years. So be careful out there. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, hire and consult a financial advisor. It's not what I do, so be careful. If you trade stocks, options, bonds, forex, futures, cryptos, treasuries, you might lose money here in the market. That's basically what that means. In case you don't understand that if you put your money at risk in any financial instrument, you might lose it. Be careful. Nobody's watching out for your money more than you are. And this is the hardest game in the world. Really and truly. Look at that pattern right there. That is a classic echo trade pattern right there. That move up, repeat it off of that. Guess what we do? We repeat the pullback. Repeat the pullback. Carvana. Watch out. This thing breaks. It's a long way back down. It's a long way back down. Got some support right in here. Some support right down in here. And then if some way, somehow they suddenly turn bullish, that would be a beautiful place to bounce. But those numbers are like a lot down. That's crazy. Crazy numbers. Be careful. Be careful. So Tesla didn't do much. We're down 18 this morning. 4%. Coming into the open here. Kind of a nothing burger. We're above the low, below the high. As long as we can stick this, potentially going higher. Now, continuation, if we get below this low, right back here, that can be an A, B, C, absolutely beautiful correction. The downside potential, somewhere in this neighborhood would be where we would expect to bottom. Also known as kind of filling the gap from right back over here. So there you go. Street Skater, Tuesdays at 5 p.m. are the time when I do requests. So the morning show is all about trying to find some stuff to look at and trade today. Seeing a little bit of softness here this morning, but the path is still the path till we break it. Looks like we're still chugging on this path. Now, it's potential that I was a little too optimistic and put this up here, and that was it. But looks like to me that's 1, 2, higher low, 3, 4, 5, up into that. Then we do this back down here, and then we do the next one right out here. Yeah, we'll see what happens. That's a big 1, 2, 3, 4. This could come down deeper. And it could all, like, that could be played out right there. Like that, maybe we don't do this all the way up here. Maybe just right there is it. Keep an eye out. Needless to say, if we get to that 68, let's outline the levels here. It's gonna be 68, 25 up to about 68, 6,900. So pretty much in the 6,800s. We get up in there, that'll be a warning sign for a bigger drop. And if we break below that low from right over here, probably going down bigger. Haven't really had much of a pullback. Now, bigger picture, I talked about this earlier in the week. We're right in here. We may have some little bit of chop. We may experience a bigger upside, bigger pullback, bigger pop, bigger drop, bigger, like the swing. This is more volatility in the price action, and the swings could be breathtaking. I mean, look at that, up to like 70, say 7,200 maybe, back down all the way down to 6,500. I mean, that's like a 700 point swing. That's 10% right there. If we did this kind of move, this is taking the dot-com bubble and comparing it to the current AI run. And if they were just parallel, look how eerily similar they are right now. And this would be the NASDAQ over here. Lower volatility, but still some heck of some swings. And then we do the blow off top where it just gets ridiculous. And then we end up paying the piper. So this could play out over the next year or so. We're hanging out right here. The top kind of came in right here. So be careful out there, everybody. Be careful. That's the name of the game. Be careful. Might I remind you? Rolling back over here. This pullback. It's pretty vicious. 51%. 51%. This pullback we might do over here. And 51% would just take us back roughly to 2022 levels. That's funny. $618. Beyond down closer to COVID levels. But that's percentage of price, not the fib line. The fib line gets crazier. Puts us down here, really. When you look at the big run that this has been. And we're not just going to correct this little run from 2022. We'd correct the whole big run from like down here in the great financial crisis. We're talking about massive potential correction. So lots of people don't think that's the way the cookie's gonna crumble, but hey, it's okay. Everybody ignores the party. Look at how we make money today, though. There's the path. So right now, this looks like we've got first move down, a retrace, and we might see some more softness right down here. Had a little softness yesterday. Get another repeat right there, or we can come up again. The lows from the last couple of days, last couple of weeks, are the important levels to watch. Right in there, that one, and then that one right there. Get below those, probably taking the detour south faster. And right now, that would be a potential to come down to 6,300. In queue, just wiggling around in here, not really doing much. Got the majority of big tech hitting next week, right when the FOMC is supposed to fire off. Do they rate cut? Do they rate not? I don't know. Russell still looks like it's primed to pop right up here, 2,600. Looks like what we got. Oil coming back up for the roadmap line test again. And then watch out for the next drop. Still a downtrend. Gold. Watch out for the big drop. We haven't even done a big drop yet. Feels like a big drop, but be careful. Be careful. We went out of 3 standard deviations. And 2006 back here is really the kind of similar exuberance we had. We did a very similar ramp consolidation for several months. Then we did this giant pop. You look, we had a couple days of drop, took a little reprieve, and then continued to grind down. This gain-wise, very similar to the gain we made so far. Doing that. Watch out for that. Could happen over the next month or two. And then we might go into a little consolidation for a little while. Longer while. And this was kind of a consolidation for... See, there's May. There's a year and a half-ish. Before we broke back higher again. Then we did another big up and another big pullback. So, yeah, be careful on gold at this point. It can take a multi-year breather. The narrative got a lot of people sucking in. Now, bigger picture, longer picture, bigger narrative. The U.S. is on track to basically do their 6th default. 6th default. You know, people say, oh, you know, U.S. has never defaulted on their credit. Blah, blah, blah. Yeah. Never officially, but we did like 5 defaults already. And this one will basically be what that was, but this one basically occur when the Fed becomes, the illusion of an independent Fed goes away, probably. And what does that do to everything? Well, probably going to be a bubble bust. Probably going to suck down a lot of assets, risk on stuff, and then gold may reprice higher. 1971 was the last time we had to do something major. Create the Fed. Break it loose of gold. Every time we've had to reprice gold and redo this and redo that, that's basically been a default. This will be the 6th one. Bitcoin still hanging out under the roadmap line. This is still bearish, but we held on to the 618 retrace here from that low to this high. Holding on for dear life. If we can break above this high, game on. Got to get above that level right there. 117. We can get up through it. Odds are we're going to a new high. 130 would be the target. Maybe 133. But we got to get above that 117. As long as we're below it, that's the first move down. 3-wave retrace, especially with the 1, 2, 3 we've got sitting there potentially in place. And that can lead to a much bigger downside here. So right now we've got that move, this move. Oh man, that puts it, look at that 100%. That's the A, B, C potential. Absolutely beautiful correction. This was the trend down into this. That's the correction. Resume the trend. Yikes. Be careful, everybody. This could be the start of crypto winter. Ethereum kind of got the same thing going on here a little bit. Although this looks more like a diagonal down. Less clean, less clear. We did make a bottom here. Could be 3 waves into a nice proportion. If we can turn it around here, we've made a move up. We retraced 618, made a move up, retraced 618. If we can bust out of this downtrend of highs, we attempted here, failed miserably, went lower low. If we can actually break up through, retrace, retest, hold above, probably go to a new all-time high on Ethereum. Caution level was turning down right there. And that was a perfect ABC proportion off the lows. Unfortunately. So we need this to break out and get some momentum and keep going if we're going to get those new all-time highs. NKD, which is global liquidity indicator, hit the target. We scraped the bottom of the zone. 49, 50,000 is what I've been talking about for over a year and a half. So is global liquidity cooked for now? I don't know. Maybe we take a little breather and then ramp it up again. DXY coming up into the roadmap line again. We're in the vicinity. We have that. Let's just clean that up just a little bit. Here's the high, here's the low. We're at the 618 level right there. First move down, the retrace. Do we break through and push higher? Or do we bounce off of that and come back down here? Potentially going even further down, and then 4 or 5, and actually bottom out lower than the low we had right back here. So we'll see which way that goes. See which way that cookie crumbles. Apple dumpling was crack-a-lackin'. Topped out at the proportions of ABC. It pushed it to the extreme on the C, but first move up A, second move up C, although it took a while to get there. C was 1272 times A. That move times 1272, thrown right up there, topped out right there, right at the prior high. If we break through the uptrend of lows, watch out below. Try to break down here, didn't do it. Bouncing, bouncing, bouncing. So support right now coming in here, and then maybe lower low than that one right there. Amazon sitting on the roadmap line, not really doing much at all. Downtrend of high is cooking. That's the resistance we got to get through, putting down pressure on it. If we push back below the roadmap line, watch out for a bigger flush. We could see a bigger flush into the end of the year. This is kind of setting this up right now. Google, if we reach up and touch that 263, that can start a bigger correction. Meta, so far, holding the roadmap line. If we break through the 618 there at 755, looks like we can go on up to 840 area. Microsoft probably setting up for a bigger downdraft. This could be down here by the end of the year, so I might get some, was it MSFD? Yeah, I might pick up a little bit of this. Might pick up a little bit of that. We're looking at, so that was just a 1x bear. It's not leveraged. Or could be leveraged. But if we do that kind of downtrend, that's a 10%er. MSFD. So this could go up like a buck. Not a big move, but 10%. About a buck. Not bad. Now, one thing I wanted to mention here before I get too far out of the, I'll come back in a second and my thought there. Before I get too far out of down the list, NVIDIA still being soft. Looks like we're going to retest the breakout. Be careful, that can do kind of a, and then we'd have a head and shoulders in place, and that could develop into something a little deeper before we go higher again. On NVIDIA. Tesla, as long as we can hold on to that low, we can go higher here. And it's possible that this was the 3 wave over here. The first move down, retrace, third move. And this be the 1, 2. We break above that, positive. We break down below that. Come on down. Netflix. Right back down to the roadmap line right here. And might get that extension. So those are the levels to watch for supports on Netflix. We're sitting on this one. I was kind of disappointed when we didn't hit that back here. Well, now we got it. Now we got it. 3-wave retrace, ABC. Absolutely beautiful correction. The proportions weren't great on the C, but it did get the higher high. It's all we really needed to complete the pattern. And right back down to the target. So I want to point out something. If something I saw yesterday, that got my attention. So there's 140 million, I think it's 140 million ounces of silver are being floated around. That's the float. There's been 600 million ounces traded a day. So that 140 million ounces gets traded like 4 times a day, plus a little change. Now, SLV, if you're into getting exposure to silver and even gold, SLV, they've got paper. They're if you look at the number of shares that they have of SLV and the dollar value of that and the ounces that that's supposed to represent, something like 2 billion ounces of silver. There's only 140 million ounces that are liquid to back that right there. Where's the rest of it? It's just paper. The silver to back. If this went into redemption, there's no silver in the vault to back SLV. Same thing on GLD. So I was diving into this last night. If you want to actually own some silver in a more trustworthy ETF, check out this one, PSLV. And if you want the gold, PHYS, it's Sprott. If you actually want to own the stuff, like Sprott has the actual stuff and it's been audited. So if you want to actually own some uranium, you want to actually own some physical silver, physical gold, but you don't want to do it with your own vault, here you go. Sprott is the way to play. Just be careful out there, everybody. Dug into that last night. I was like, ooh, that's kind of crazy. So 2 billion ounces on SLV. And there's only 140 million. And that 140 million gets traded around every day. So that's in the London vault. There's only 140 million ounces. Let's think about that. That's crazy. That's crazy. The gold likely won't retest the high for a little while. We ran for 7 days outside the third standard deviation. Last time we did that for 3 days, we did a 5 months consolidation. Now that we ran longer, this could mess around in here for a longer period of time before we can break out again. So gold might go back to sleep for a little while. Just be careful out there. Empower. It's monolithic. Yeah. Coming on up to the 1,000 target. Maybe able to go up to 1191. Regette. RGTI. Shorts back after it. Yep. Had a little overnight pop. Shorts are getting back on it. Likely to do that. Might take us a little while. I've got a 2330. Bought the 30, sold the 23, put spread on this thing. It's like a 1 risk to 7 reward. Or something like that. 1 to 6, I guess it was. 1 to 6. I'm just trying to triple my money. I want to go for a 3, you know, 3 times the money. I'm out. Almost got there yesterday. Another little dip. I bet if we get this one more little dip in here, I'll probably be out. Let's see what else is interesting here. Baba. That was a good retest of that big 618. Pushing back above that high. It's going to set us up to go back to the all-time high back here. 320, maybe even push out to 410 time frame. Well, this is on a quite the climb schedule here, but that could still push us well into next summer before we got up there. STX looks like we're gonna come on down, hit the 1618. PPLT still has the 160 target. We almost got there, but I still think we're going on up to 160. 166. 160 was the number I called out, but 166 is the right in the middle there. And if things get extra spicy, could take it on up there around 205. ALB still working on. Yeah, this is the first sign of reversal. We break through, retest again with a higher low, pushing above. Now we want to see it get up into this and break on through. So next resistance is right there on ALB. If we get through it, we've got to work through this zone. Once we're above that, it can go up pretty big. It can. Of course, it can fail too. Baidu, despite Baba looking nice, Baidu looks like it's coming on back down just a little bit. Lending Club, what a joke. They were peer-to-peer lending. Now, who knows what the heck they are. NEM, watch for this to come back pretty viciously. I'm off of that one. Played it out. I got in back here in December, and I bought 60 calls. Booked those out for my mom's account at 80. Booked them out my other account for just minimal profit. I needed the money to be able to do something with it. GTX. Yeah, nothing. Molina Healthcare. Oh. Didn't even make it to the roadmap line. Right back down, lower low. So this is probably working on the finality move here. 1, 2, 3. ABC. Might be able to push on down to this 146 area. But it's already satisfied the condition by making it the lower low, so watch for the bounce, the retrace, the push through the roadmap line, the retest of it. That could all indicate we're going higher again on Molina. But if we don't do those things, it can keep making lows. Like, it doesn't have to have a bottom in place. Come on back here to these COVID lows. And what's funny is the COVID lows were the lows for a couple of years before COVID. There. IBM. Oh, beautiful move. I really wanted to see that hit, but that may be all we got on that one. Could just be a 4-hour bounce. Yeah, beautiful. Beautiful 4-hour touch. Puts the target at the same place as the bigger bounce back here. on the daily chart. Probably coming on up to 306 on IBM. ASML, look at that, struggling right there. So this right now, where it stopped, is a corrective proportion, ABC. I drew that on there all the way back here. Anybody remember back in July when I drew this on the chart? I said, well, it's probably coming up here, and it was highly likely to stop in this area, and that's where it did. So if we're going to be bullish and get continuation to new crazy highs, we have to move on up here and then consolidate again and then break out. That's what we need to do to go higher. This right here, stopping here, any sign of weakness that pushes us back down into this daily roadmap line, and then if we overlap that high from the A, indicates we're probably going to go lower low than this low back here from April. As crazy as it looks and crazy as it sounds. PKG, nothing. Nasty price action. Carvana. Now if we hold here, we go higher again. If the cracks keep forming, watch out below. Remember, the market can stay irrational way longer. You can stay solvent. Look at that. UNH rallied right up to the roadmap line. Couldn't push through. Second attempt. Watch out for this bigger, deeper correction. We could really use that 618 retrace. If it doesn't have the energy here, I don't care. Warren Buffett, anything, you know, whatever. What the chart's indicating, and then that sets us up for the bigger potential upside. Right now, that's just one move. No pullbacks, really, so caution. MU right in the target and hadn't really gone any higher than 200. Beautiful. I got in that baby back here and out at 200. Now just off my list for a little while till we get another pullback or some other action. And let's see, anything else? Let's just look at the setups here. These things are set up with my signature roadmap bounce pattern. If you've not watched it, click the link for the channel. Go to the homepage there. Give you the code for free. Explain how it works. 674. Low price stuff. Caution. Let's pull up the statistics on these. Here we go. 13, 76, 2. Not great. Not great statistics since it's not over 30 on the. So this just falls back in the average of 75 and 1.2 and 28.86 targets. BSX. Clear that one off. Here's the high, here's the low. There's the entry, 112.40, 23.69, 1.6. And that one already worked. There was the high, there was the low, and already hit the target. COF. Capital One Financial. Here was the high, here was the low. There's the entry, and 235 is the target. This one runs a little lighter on profitable, but a little heavier on the profit factor. So real just kind of in line with the average. DHT. Here's the high, here's the low. Here's the entry, and the target is right there at 13. Doesn't have any statistical significance to that particular ticker at this point. Hadn't done it long enough. There's the high, here's the low. Potential entry here, 48.50 is the target. And not statistically significant. HLT. Hilton worldwide. There's the entry. 283 targets. Wow. Nice profit factor, but only 17 trades, which is only half of what we need. And 2035 targets on IEZ. McDonald's firing off again. I'm still long from the last one. Never stopped out. $323. Might add a little bit to it. Just look, I mean, 43 trades, 81% profitable. Profit factor 1.6. It was over 2. That last stop out ate into that pretty good. MPLX. There's the high, there's the low. Coming up right there. 53 is the one I would go for. NWFL. There was the high, here was the low. Going for the 2787. OII. Oceaneering International. Get a whack back down. You could potentially get in cheaper than the system did at 27 targets. 32.87, 3.7. This is a pretty good trending stock right here. It's something that you probably never even heard of. I know I don't look at that stock very often, so. There's the entry, 36.55 target, PFBC. There was the high, here was the low, there was the potential entry in 101.90. SMBK. There was the high, here's the low, there's the potential entry, 38.71. And nothing on the statistics. Yeti. This fired off a couple weeks ago on the bigger bounce, made a smaller bounce, kicked it off, 37.50, and then the bigger bounce over here has 41.60. And then ZBH, here's the high, here's the low, entry 110.40. There you go. That's what we got. And bias for the day. Looks like we might go higher. Beautiful. So that's 3. I just caution here. This could be 1, 2, 3. We could run into resistance there at 67.80. And then still go down for that move. 1, 2, 3. Right there. Just never know. Be careful out there, everybody. Try to stay abreast of the situation. I'll be on Market Masters here in about an hour and a half, 11:30. Alex joining us today, Jack and I. So have a great day. We'll see you later. I'll be back tomorrow. Same bad time, same bad channel. 9:15 tomorrow. Do it all over again. Hunt for opportunity. Talk about what the cracks are in the market.